Welcome to PhillipCapital's Weekly Market Watch. We have seen increased market intervention in the recent weeks by regulators to curb speculation. For instance, the Securities and Exchange Commission has made the ban of naked short selling a permanent rule, and the Commodities Future Trading Commission is coming down hard on energy speculation. Today, we have Mr. Dexter Tan, investment analyst from Phillip Securities, to tell us more. So Dexter, do you view regulation on market as a negative phenomenon?
Yes, usually tighter regulation on industries tend to lower the profitability for the entire industry. Usually when there's a lot of regulation, there's going to be lower investments in the industry, there's going to be higher wage premiums for the employers in the industry, and labor markets are going to be tight. And also there's going to be lesser competition among players in the industry, as well as performances in the industry will also be lower. On the other hand, market deregulation has also a significant impact on industry, as well as especially in the areas of employment. Employment effects are usually very sizable, especially if the deregulation impacts both the product as well as the labor market at the same time.
How about supervision on markets and taxes on securities transaction? How do they impact the markets?
Okay, usually transaction taxes can have negative effects on price discovery, volatility, liquidity, and even lead to a reduction of market efficiency. Because transaction taxes can be likened to increasing supervision, like for example recently the US is suggesting that they want to supervise the credit default swap market, and this increased supervision is very much likened to increased friction on price transactions. So first of all, trading facilitates the provision of liquidity, price stabilization, and price discovery. Trading helps to manage risks. If investors cannot carry out their desired trades, the demands for these trades are never satisfied, and resources cannot be allocated to their best use. So this impacts price discovery. Okay, with the introduction of transaction taxes or increased supervision, the demand for derivatives will also increase because risk appetite is not satisfied, and with more people trading derivatives, volatility in the market will also increase. So higher transaction costs will also limit the migration of transaction volume, and the market could also dry up, which impact the market liquidity. So just to sum it up, increased supervision or increased transaction costs can have substantial effects, which like leading to mismatch of demand and supply of prices, destabilize prices, increase volatility, and reduce market liquidity, and therefore inhibiting the efficiency of financial markets.
If more regulation generally translates to a more negative effects, then what do you see more regulator interventions in the future?
From a political standpoint, because the government has to act on behalf of the general public, and they need to come up with more rules to curb speculative activity and help the man on the street, and to prevent social unrest. From an economic standpoint, you see that the depression has been rescued by this increased public spending, increased public debt, and the printing of money. So at some point in future, the public sector has to pay back all the money back, and this would translate into more regulation on the private sector. So therefore, we are going to see more regulations coming up, and possibly more interventions in the markets.
Finally, what do you think of markets right now?
Okay, for the markets, I'm still biased to the upside for US credit markets. I like credit markets in the medium term. I like US assets better than emerging market assets. I think the Asian growth story could take a step back for the moment. Because of that, I like US high-yield bond funds in the medium term. In the short term, I'm interested in agricultural commodities. I think food prices might hit higher. The cost of sugar is already trading at very high levels, and this could translate to higher food prices in future. I think we may reach a point whereby commodities could react more positively to good economic news than stocks. So if you look at the numbers next week, the US unemployment number is coming out, and some US housing data is coming up. And I think it's going to be better than expectations, but I think the market already knows that.
Thank you, Dexter. That's all we have for you today. Tune in next week for more market updates.